Tahir Badshah from Invesco joins in on the show right now. Tahir, hi, morning. Good to have you on the show. Just wanted to understand what your market, construct is right now, in opinion, given the kind of recovery that we've seen from the verdict day lows and pretty much across the board, be it large caps, be it mid and small caps, or for that matter, PSUs in particular as well.
Yeah, hi, good morning. I agree. It's been a very smart recovery, and it is on the back of the fact that we are still in a sweet spot as far as the overall economic picture is concerned. When you look at it, especially after the elections, what also probably now perhaps enthuses the market is that the market can probably broaden out. We've had policies which are a little more, which have been somewhat more attuned to the economic cycle, industrial cycle, investment cycle up until now over the last 2 odd years, and probably can we look forward to eventually consumption also on the other side picking up as a consequence of reasonably strong growth that we have seen on the industrial side and the investment side, which should percolate down to consumption at some point in time, and also probably from the point of view that at some stage. Uh, Policy also may probably be supportive on the other side. So it's a nice combination to therefore have and look forward to, and that is what is keeping the market excitement up. Of course, we have a plethora of important events which we get into in the second half of the year, whether it is the outcome of the monsoons, policy on the budget, and of course certain global events as well, including the US elections. The whole thing about policy rates, interest rates, and how are we going to be navigating that over the next 6 odd months. So I think there's a fair bit of stuff which will keep the market a little more in check as well at certain levels. But I think by and large, still the overall picture looks reasonably certain, and that should keep the market in reasonably good spirits.
Why have markets retraced all the so-called budget day gains? I mean, look, valuations were a concern, and that's why markets fell. And if I look at the market right now, we are way above what the July 4th lows were. June 4th.
So clearly, like as I said, I mean, we had that initial jitter around, the stability of the government as well as in terms of the continuity of policies. But once that was reestablished and market got the comfort that at least for now we don't really have any major disruption coming along the way. This is not only something that we can call for the next 4 or 5 years at a stretch. I mean, we'll have to see how it goes, but at least it's a good beginning. A couple of things which have happened post the elections with regard to formation of ministries, etc., has also been taken positively and been construed as a continuity signal. So I think that's what has brought the confidence back. Of course, flows have been supported alongside, and last but not the least, I think the global markets too have behaved quite well. We are starting to once again see the possibility of the Fed coming closer to a possible rate cut towards the end of the year or beginning next year.
And if that happens, what does that mean for flows?
I think they at least sustain. I would like to think. I mean, generally, emerging markets are typically more leveraged to the interest rate cycle, down cycle particularly. And I think, therefore, if we start seeing the possibility of or a reasonable conviction that interest rates have topped out. I think it should be beneficial as far as emerging market flows are concerned. And we've seen some pressure on emerging market flows, as you know, in the first few months of this calendar year. So I think that's something which can probably retrace. But it's, flows are always difficult to call. They're a function of a number of things. And therefore, to that extent, we can only hope that, as in the past, it will signal better flows.
If you like this video, then like, share and subscribe to ET Now.